Stocks taking a hit today as negotiations with the EU have hit a snag. For more on what the latest trade wars mean for investors, let's welcome in here Jed Ellerbroek, Argent Capital Management Portfolio Manager. Jed, it's always good to see you. So let's walk through the trading day, Jed. It was a President Trump kind of day. He has dominated the headlines. He's going after Apple. He's going after the EU. The SPX, the S&P 500, it was down about 1%, Jed. Now we've backed off that. We're down about 0.5% here. As someone who actually has to put money to work, though, Jed, I'm just curious how you try to think through a day like this, think through headlines like this. How do you navigate it?
Yeah, good question. Patiently, I think. You're right. Tariff Man was back today. He'd taken a break for a few weeks. Last week, he took a trip through the Middle East and sold a bunch of Nvidia chips and Boeing airplanes. That was great. The market loved that. We'd like more of that. I think the market would be in good shape if we could stop talking about tariffs and talk more about the tax bill and have salesman Trump come out to help big U.S. business.
Well, I mean, we could do that if he would stop talking about the tariffs. We're just following his lead, aren't we, Jed? So, I mean, that said, stocks are not down that much today. Certainly not down as much as they were on earlier tariff announcements and rhetoric. So what do you think is the takeaway there? Is there sort of diminishing damage done from some of these announcements because the market doesn't take him seriously? Or is it just, we're going into a holiday weekend, there's not as much volume? I mean, what do you think is going on?
Yeah, I think for a couple weeks now, the market has been taking almost the most optimistic view possible of the tariff and trade war threat. Whether that's accurate or appropriate or not, we'll have to wait till, I don't know, another 45 days. We're about halfway through his original 90-day pause. But yeah, I think the market has been taking this all in stride, which is, I find it a little surprising, but I think that's been really consistent for a few weeks now. The market views these as negotiating tactics that will not be followed through on, despite the seemingly tough talk here this morning.
Against that backdrop, Jed, as I said, listen, you have to put money to work. You got to find opportunities. I'm interested in reviewing some of those. So let's give people some investment ideas. One name you like, United Rentals, Jed, ticker URI. Why is that one a buy in your opinion?
Yeah, we've owned United Rentals for years, and we think it's an outstanding business. The kind of core reason we like it is because in America and most other developed countries, the users of construction equipment are gradually but consistently shifting from owning and maintaining the equipment themselves to renting it instead from the big rental yards like United Rentals and Sunbelt. So that is a kind of a steady, consistent boost to demand for United Rentals in its industry. And then on top of that, United is just a very well-managed company. They dominate the industry. They've got the most locations. So that means with these big mega projects going on around the United States, building semiconductor manufacturing, battery manufacturing, all the airport construction and hospital construction that you see when you drive around urban areas, those people want to use one contractor nationwide. And so United is the natural choice for big construction projects like that and the big contractors that serve them. So good business, consistent demand, and demand is hanging in there pretty well despite what seems like a kind of uncertain economic environment. The company hosted an investor event earlier this week and had mostly positive things to say. So it's a stock that we continue to like and have as a big position in our Argent large cap portfolio.
And then, Jed, let's talk about big cap tech and specifically the kind of AI related trade here, right? Nvidia is going to be a big event next week when we get earnings from that company. There was a report today that Oracle was dropping, something like $40 billion, according to the FT, on Nvidia chips for some of the OpenAI data centers. So it seems like the spigot is still on. What does that mean for investors?
Yeah, I think, so you're right. Nvidia earnings next week. We know about the bad news the company will report, the write down of the H20 inventory that was going to be directed toward China. The company's going to take a $5.5 billion write-off on that. They're going to lose future revenues that would have been tied to those products. So that's the negative that the company's already told us about. I think the guide for next quarter will be decent despite that, which is pretty impressive. And then I think the company's going to speak toward optimism looking further out. And that's mostly tied to what you mentioned, which is really a new class of customers for those accelerator chips. We're not just talking about, the hyperscalers, Amazon, Microsoft, Google, buying Nvidia chips to put into their cloud computing data centers. But we're talking about enterprise demand for Nvidia chips, and we're talking about sovereign AI, which is these foreign countries wanting data centers built in their countries filled with Nvidia chips. So I think that Nvidia still faces a really, really strong demand environment. They are more supply constrained than they are demand constrained.
Thanks, Jed. Appreciate it.
Have a good weekend.